The dollar index has done it again. NFP is super hot this month, showing September we added a massive number of jobs to the labor market here in the United States. Now, what does this mean for you as a currency trader? If you trade gold, indices, any currency crosses, this video will be helpful to you in understanding why this pop has happened and where the dollar may be headed next. Let's jump in. So here it is, guys. We're taking a look at the dollar index, which has rocketed higher, breaking clean through resistance that we had at 106.55, and now just slightly pulling back after the jobs number came out. Now, at the time of recording this, it is, of course, 9:40. The US stock market just opened up, so some trading is going on, of course, but the jobs market today saw a major increase. And I want to break this down both fundamentally and technically what this does for some dollar crosses. Now, again, starting with the dollar index, I want to show you something. This is the 15-minute chart, but as we narrow it back or pull it back to higher time frames, what you can see is that ends possibly this downward kind of trend that we've been having on the dollar index off of the 1-hour chart. Notice that each time price had retraced, we saw sellers come back in. Not until today, it looked pretty good, but until today, today we had a huge pop. And I want to talk about this and ask, you guys to think about something. Is hotter jobs really that bullish for the dollar? And why is that? Well, let's break it down. Hot jobs numbers means everybody's getting jobs, they're getting employed, and a tight labor market means that more people during this holiday season are likely to go out and spend, buying cars, houses, gifts, things like that, services. It is likely to boost spending. Now, why is that so scary? Why is that so bad? Well, it's good for the dollar, but everything else gets hit hard because what this means is that the Federal Reserve will need to keep interest rates higher for longer to keep things from getting overinflated, right? We've all seen it. You go to the store, prices are going up, and the Fed does not like that. But with hot labor market statistics coming out, that is only set to continue, which I know if you're like me, I'm getting tired of going to the gas pump and spending a ton of money or going to the store, and what used to cost $20 is now $30, right? It's very impactful to everyday people, and it's not just in the United States. Other places are experiencing elevated levels of inflation as well. Anyways, this dollar breakout, is this a pullback? Well, if we just look at the dollar, this is an incredibly bullish catalyst here today. And if we draw a fib on the 618 on the dollar, you can see the 61.8% retracement lines up beautifully with this past level of resistance. And if this price does pull back, dollar bulls may be at the ready to continue to push this. Now, I want to show you some economic data here that might go very well. Let's talk Euro USD. So we've got the Euro dollar, and we've just been working on this fundamental analysis page, which will show you some really key statistics. The Euro dollar has been very bearish and still is. If we show you some cool stuff here, what we can see is we scroll down to the labor study component here. And what you can see here is that when we compare job statistics, right, you've got the US adding 336,000 jobs. Previously, we saw 227. We were actually expecting that number to go down more. And this time, what do we get? A shock to the upside. Again, this is why the dollar is so bullish. Here was the previous jobs. We were expecting it to go lower. In fact, what we got is not that at all. We got more jobs added. Now, if you take a look at the unemployment rate, right, or compare it to the euro specifically, the European region saw a slight job decline or less jobs created than were expected, etc. So my point with showing you this statistics is it is clear to understand once you look at the labor statistics why the dollar is so powerful. And when we look at the algorithm generated here on the EDGEFINDER, the output, right, the top setups page, we can see that dollar bullishness is still very much alive. Dollar yen still bullish. CAD yen, by the way, had a nice pop here today. CAD had some really strong jobs numbers as well. And across the board, you can see a lot of dollar crosses. I want to show you real quick. We'll show you the let's go major currency pairs and let's add commodities so we get gold as well. And what we can see here is, look at this. Everything across the board is pointing towards dollar bullishness. Now, this is not a new signal. This is ongoing. We've had pound dollar, euro dollar, Aussie dollar, Kiwi dollar. Gold has been bearish. All these things have been bearish signals for weeks now from the EDGEFINDER. And again, it's looking at lots of statistics that we are getting. Today's labor market only acts to complement the EDGEFINDER's bias on the short side. And then you take a look at the other side, dollar yen, dollar Swiss, dollar CAD, our three USD, of course, base currency pairs, all seeing very bullish readings as well. So my point was showing you guys this is that the EDGEFINDER maintains a bullish bias. You take a look at the smart money tracker, you take a look at the US dollar, there it is, high net positioning to the long side. Institutional money maintains a high net long ratio on the dollar index, okay? So again, you have a lot of statistics, a lot of data here that points towards a nice threshold for bullishness on the dollar index. So when we start taking a look around the room, I know a lot of traders are gonna ask about gold. Is gold gonna break through the lows? And in my opinion, this chart looks surprisingly bearish. You might say, well, Nick, it's holding the lows, which I guess is an argument for gold bulls. They might say, well, despite all this data, we still see gold holding 1815, 1820. That range is still intact. To your credit, that is actually pretty impressive that gold has not broken. But to the bears' credit, we've had a massive run, so it is probably due for some consolidation. But what's more interesting to me is that this level of support, this 1810 level, with this NFP jobs, when the jobs numbers coming out so strong, to me, it's likely that we see continued push underneath that level. And if it does break out lower, I'm not saying I'm selling at support. I'm saying if this level does break, I think it has good grounds to continue. It's hot jobs, yields are higher in the US. We see in terms of Chinese slowdown, that's another bearish factor for the gold market, as metals will be in less demand if China continues to decline. You just have a lot of stuff going on. There's a lot of, the Federal Reserve is just being so hawkish that is going to continue to put pressure on the metals market. Inflation is still hot. That is going to lead the Fed to stay higher for longer. Another thing to think about, guys, is that this isn't often, if you're going to trade gold, this is something you need to understand. Yields, take a look at the 10-year. This is the 10-year yield chart, not something that, many traders are very interested in. It's kind of boring to talk about bonds, but I made this mention on my stream today. If you trade if you trade currency pairs, you trade bond yields really, because bond yields are reflective of a lot of the dollar's strength or weakness. With the yields continuing to march higher, this marks just the sign of economic strength here in the US, as well as the risk to bonds increasing because of, just some uncertainties that are rising with this. There's risk off sentiment in markets. People are not buying bonds, and they're demanding more interest in return for buying those bonds. Anyways, why does this matter to gold's price? Well, think about it. If you could go if you have the option, many longer term investors who carry deep pockets, they're making the old decision between bonds and gold. And when bonds are yielding more, suddenly bonds look more attractive in respect to gold. Gold yields nothing. It's a shiny yellow metal that sits in your safe. It doesn't yield anything. Bonds at least yield you something. If you want to be risk adverse, they yield you something year over year. You get a return. Right now, the 10-year yield, meaning if you buy a 10-year bond, is looking more attractive as it approaches 5%. Basically, you can take the closest thing in markets to a risk-free purchase and get 5% per year for 10 years straight. And that might not sound exciting for traders and active, people who are younger. But if you're older and you're retiring, where a lot of the big money is sitting, right? Older people have a ton of money. 5% and sit back, that's not bad at all. That's the problem for gold. These yields rising puts a lot of pressure on the gold market to continue lower. So you have to understand these things. These are very, very important components. If you're going to be a fundamentalist, if you're going to understand macro drivers, yields put huge pressure on the dollar, and with that, gold. In terms of other things to consider here, guys, like I said, the major consensus here from the EDGEFINDER is I'm staying dollar bullish. So when we talk about, Euro USD, I'm looking for an opportunity to short this one again. I am still, I took a trade. Unfortunately, I got stopped out on my trade. I'm looking for a chance to possibly re-enter. I may find an opportunity to do so. And if I do, I like the idea of being short in this general area. We've kind of really seen a sell-off as we pull back intraday. I think there might be an opportunity to consider looking at this one. And if I do enter, I'll put a stop above the highs, that sort of thing. I'll probably be taking this taking a look at this trade opportunity after I record this video. But I do think I like like this. And if I take that trade, you guys will see it inside of the Discord community. By the way, we've got a free Discord giveaway going on this month of October. If you'd like to join the Discord for a chance to win a gold VIP membership, all you have to do is click the link in the description. It will take you to where you can sign up for our Discord community. And anybody who joins, there's we're going to be selecting one person to get a unlimited membership within our community for free in the month of October. Or if you'd like to go ahead and sign up for a membership to see the trade alerts being shared by Frank and myself, you can find more information about that by clicking the link at the top of the description, where you'll be taken to a live chat opportunity. Now, I want to say one thing too. If you've made it this far, we are 10 minutes into this video. If you are somebody who has been thinking about getting the EDGEFINDER, during today's live stream, we did an NFP sale event. Now, this NFP sale event, we offered the EDGEFINDER for 45% off to people who are watching live on the stream. But if you didn't make the live stream and you missed it, we are going to be extending it just for the end of the day. Today is Friday. We're going to be extending the 45% off EDGEFINDER sale. You can get a copy of the tool and all of its awesome features for 45% off until the end of the day. And I've made this point. I'm trying to put this out there so everybody is on the same page. We are planning transparently to raise our prices on the EDGEFINDER. And so this sale is kind of a last chance opportunity. If you want 45% off the EDGEFINDER, get that huge discount before the prices do go up. You can click the link that's at the top of the description, and when you do that, it will take you to a live chat support center where you can communicate with someone on our team to get a copy of the tool. Take advantage, click that link, click start chat, and you'll be speaking with someone directly on my team. It is a real person, not a robot. So hope this was helpful to you guys breaking down NFP today. It was a wild market move, and I hope you guys have a great weekend ahead. See you guys. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.